Welcome back, Sean. How are you?
I'm good. How are you?
I'm doing well. I'm glad we could reconnect. Had a little trouble, so we apologize for the delay on getting you on, but
Hey, no problem.
hey, glad we could connect nonetheless. So, we had a listener write in early on about Acacia, this being one of your favorite names, ACIA, of course, and you got involved in this one. So walk us through what you're seeing, what you're hearing, and what do you think? Well, we know what is driving the price down, but help us make sense of why.
Yeah, well, I mean, I actually think that's probably one of. I mean, there's a lot of dumb reasons why stocks move. I mean, in fact, most of the time, a stock is moving sort of stupidly, right? Especially there's lots of times a company will get exceedingly good news and it'll get sold off, and vice versa. There's just it's psychology. Psychology and where algorithmic pressure can be exerted to make maximum short-term profit is how stocks move short-term. But long-term, they don't move that way at all. This is a weird one. I mean, you normally just normally forget about this space, but really any space, technology, energy, whatever. Anytime you get an M&A deal, it's generally positive pretty much for the whole group. So if anything, you'll kind of see a spike in the whole group, and then maybe a bunch of names fade. I mean, this is one of those cases where Infinera is buying a company. Again, I think almost any fiber optics / bandwidth architecture merger in this space is probably good because there's still, even though the group has consolidated a lot, it hasn't consolidated near to the point where the semiconductor industry has. But that's where this group is going to end up moving towards. I mean, at some point you're going to get a huge move out of this group just because they'll finally have. It'll be like the railroads where you'll finally reach a really good equilibrium point between the number of people, the number of companies operating in the space, versus the number of customers that buy from the operators in the space. And the plague of this group, pretty much since '99, or since the downside of '99, is that the business was so good for about a decade that you basically created artificially too many companies in the space. And then it's taken a long workout period to kind of right size the industry, so to speak. But yeah, I mean, Infinera is buying a company. It's an existing company. It's a private company. So like the assertion that this is going to hurt Acacia, it is literally ludicrous because the company's already been in the space, and Acacia's been competing with the company because they've been in the space. So it's kind of funny. People think, oh, it's not a publicly traded company, so therefore they haven't been competing. Sometimes the harshest competition for tech companies actually comes from companies in the private sector. Mm-hmm. So the bottom line is this: if any, the only thing this does to the competitive landscape is basically make it better, because every time you take a player out, now you'd say you could say, well, wait, the player's already out there, they're just going to another shop, but anytime a company buys another company, they typically don't invest in them. They pull investment out of them. So, meaning they want to increase margin. So they basically try to, milk the technology. They might put some more R&D to it. But if anything, you basically reduce R&D. Typically, is what most M&A does. So, again, I don't think this hurts Acacia's competitive position at all. In fact, I think it strengthens it because, again, you're basically taking a player out of the industry, and you're putting a player in the public company's arms, which is Infinera, which they'll probably try to increase margin, so on and so on and so on. Again, it'd be like saying, hey, Skyworks. 4 years ago, when Skyworks was doing a bunch of M&A and Avago was doing a bunch of M&A, having all their competing companies in the semiconductor space be selling off, and that's exactly the opposite of what they did. They all kind of went up, and the whole reason that Skyworks is $100 and some stock today versus a $25 stock today is because they did a lot of smart M&A as well as the whole industry did, and so the semiconductor industry is a much better competitive position relative to who they sell to, and i.e. they have pricing power that they didn't have 5 years ago. And that same thing will probably happen to the fiber optic space. By the way, that's not really, I haven't really baked that in. If to the degree that happens, and margins improve and competition gets a little better and pricing power gets a little better, that's just all upside to kind of my current thesis. It's not, I wouldn't say group M&A is not part of my bullish thesis on the fiber optic space, because frankly there hasn't really been a lot, and this is a relatively small deal.
All right, so
but I mean suffice to say, anytime Acacia's down 2, 3, 4 points, there's a good chance I'm adding to it. I'm not going to post every time I do a trade like this, but if I see a kind of a no reason sell off, there's a high likelihood I'm probably buying. If not increasing my investment stake, I'm probably trying trades around it. So I mean, this is just, now if it was 48 and dropped down to 40 to 45, I might not be as eager. But if it's already at a pretty attractive price, and they take another 2 to 3 points out of it, all the better.
Yeah, and I'm sure it also helped. We had a listener write in asking about it, so really.
That doesn't hurt. I think the person said they got stopped out again. You guys do whatever you want to do, but I think Warren Buffett, I think, said this exact quote, something like this, where stops stop you from making money. So again, everybody's got to do what they got to do. I use stops, but I'm not going to use a stop on a position that I'm going to hold for weeks or months or quarters. I mean, if I'm worried about the risk of the position, I'll right size the position accordingly in my portfolio. So if you position size correctly, you really shouldn't need stops on volatile stocks. The other thing I'm going to say, and I kind of addressed this in my note, if you're operating in a space that has high volatility, I mean, effectively, if you're going to get stopped out of every position, theoretically. So, whether it's biotech, tech, I don't know. I mean, again, if you're doing large intraday trades that can wreck your world, if they move 3%, again, you got to use stops. But if you're trading in stuff that literally can move 10% on no news, I just don't. I don't see in fact, I don't see any mathematical validity to stops. I think stops in many ways are kind of one of these things that is almost a marketing scheme that has been created by the industry to increase trading. So again, other people might have diametrically opposed views to mine, but I think I have math behind my opinion. So, but I will say it's just, if you just think about it organically or just naturally. If you have a 7% stop on a stock that can move 20% overnight on not bad news, then you're basically, why are you taking the position? Because the odds are you're just going to get stopped out of it at a point where you might want to be buying it. So I would say you have to be really careful using stops on volatile positions, and if you're just think about other ways to manage risk. That's all I would say. Again, everybody's got to be responsible for where we don't advise here. We just tell people what we do. But so you have to talk to whoever you talk to. But develop a risk management strategy that optimizes returns, not decreases returns, is what I'd say.
I think what tends to happen is everyone develops their own hybrid trading scheme. So they're not necessarily always following exactly what you do to the T. And I think what I could see happening, now I don't know this for sure, so listeners
by the way, nor should they, because everybody does better when they, whether it's trading their own ideas or trading other people's ideas, everybody does better when they take I always call it taking ownership of your own trades, right? So however you need to take ownership of your trades, develop your own methodology to do that.
Sure.
Anyway, go on with what you were saying.
Yeah, so I can't speak for the listeners, and they can interject and prove me wrong or enlighten me, whatever. I think what happens a lot of times is they will take ideas, so from the idea generation, and then put in, so they'll take an idea like Acacia. Oh, this one moves quite a bit. Tech T's favorable on this one. He's got a long bias on it. So they take your idea, your direction, and then apply it to whatever their trading strategy is. And I think where a lot of when there is some disconnect, what happens is you're still, hey, I've been long this one. I'm not worried about this moving, 3 points. It's no big deal to me. Whereas somebody who put it into a tighter trading strategy based on your directional idea, then there's a disconnect between, hey, what do I do now, and your actual opinion, where somebody gets stopped out quicker and you don't necessarily have a stop on this one, 20% whatever. So they have a tighter risk parameter. I think that's where a lot of when our listeners have a question, that's what comes into play. So it's hard to really...
No, it is, and that's why I always try to kind of elaborate, because I would say think about what you're trading, the volatility, again, the math behind it, and say, okay, hey, am I doing a futures trade where, like in the futures market, a 2% stop might be a good stop, right? Or maybe even tighter than that. Whereas, or an index, trading the S&P, NASDAQ, things that don't move. Can the NASDAQ move 10% in a day? It can, but that's basically like almost a black swan type event, right? Mm-hmm. So you basically, I guess what I would do is have a matrix of volatility, and so you kind of have to know the volatility of what you're trading, and adjust, if you're going to use stops, adjust those stops accordingly to the volatility. I'm just trying to kind of think of something outward, like almost on the fly here, but we've seen a lot of these stocks go down 30, 40, 50, 70%, go up 4, 5, 6-fold. So I don't know. You'd have to put that into a volatility matrix, but just say, if something can move on a good earnings report and then literally double, like a Nutanix, once it got going, it doubled in about a quarter. So, and then when they rocked it, it went from 30 to 15 in about a quarter. So, can you use stops on something? You can. I'm not going to. I'm just going to position size and try to time my trades. But if something that can move that much, I don't know. I don't even know where you'd put your stop. Would it be 25, 35, 40, 50%? Yeah, there might be a place where a stop still works. But again, I would just say position size accordingly. That would be my view. Because again, if you're talking, put it this way: what if you're stopped out of something and it goes 3-bagger? There's two sides of risk. To me, there's also the risk of not being in the trades that work. So, I'd rather take the risk of a few bad trades. Again, I mentioned Pi. At one point I was easily down 45, 50% on Pi. At the other time, I got a 3-bagger on Nutanix. So if you kind of have these things positioned accordingly, the occasional bad hit is not that big of a deal. So I guess that's where we could literally spend 5 hours talking about, this position management, portfolio management technique. I don't think this is the place for it, but it's actually very complex. However, you can make it pretty simple. I would just say, be aware of the underlying volatility of what you're trading, and then if you are going to use stops, you have to adjust stops per the volatility, i.e. the more volatility, the more room you have to give something.
Yeah, well, if we talked about this for 5 hours, I'd have a couple of kids mad at me that I wasn't home to pick them up. So let's move on to Google earnings. What was your takeaway from that?
Kind of same old. Yeah. It would take a big drop to get me into. I will say this. I might have even said this. If I didn't say this, I was thinking it, but I think I've alluded to this, that, this is, if I were to buy any FANG name, this would be the one I'd be in. Mm-hmm. So I think this one has the most upside if the FANGs keep going up. I think it has the most downside if they go down. It's got the best valuation parameters. And I've said, if I were long a FANG name, it would be long. And full disclosure, Google has been my largest position at least 2 times in my life, if not more. I had it was a big part of my portfolio. I want to say from like 2005 all the way through the market crash of 2009, so on and so on. And then I want probably 2010, 12, 2000. Somewhere into early 2013, where I ended up selling a lot of Google for Apple, into the big Apple demise in early 13. So I've had Google, as my largest position. So I do like the name. But it's part of that FANG thing, and it just I mean, we might just go full bubble. I mean, I don't know if you wanted to get into this, but it's a reason I don't want to be net short yet. I'm still net long is because, hey, sometimes in the last phase of a market cycle, stocks go up way more than they really should, and then the pain on the other side is huge. But a lot of times the market, if you want to say, has four phases: phase 1, 2, 3, and 4. Phase 1 and phase 4 are the two phases of the absolute largest returns. Phase 1 being coming off some kind of a crash, so it's a recovery phase. Huge percentage moves are possible. And phase 4, basically the late innings of the bull market is phase 4, and you can get very, very huge moves in phase 4. And we're probably in phase 4, so nobody knows how long it's going to last.
You still there, Tech T?
I am.
Oh, okay. Yeah, I heard a little fade in the background, so I wasn't sure if you might have cut out or not, but it sounds like
I'm
good.
here.
Okay, good. All right, so do you still own it? Do you still own Google?
No. I mean, I could, but there's plenty of other things that I like better. I mean, I haven't really missed it. I've almost every time I kind of think about buying Google, I just find another name. So probably around the time I was buying Nutanix, I had maybe contemplated Google. Like I said, I just don't know how much I would have a hard time. I mean, like Finisar, for example, could double relatively easily. Mm-hmm. I don't know what it would take for Google to double. I mean, it would take a lot. So, not saying it couldn't. I mean, Netflix has doubled this year from an already pretty outrageously high price or valuation. So, anything's possible. But, I mean, you're talking about one of the largest market cap companies in the world doubling their market cap again. Yeah, I can find 20, 30, 40, 50 names that I think have much higher odds of doubling than Google.
Well, let's talk a little bit about Netflix, because this one is not participating with the overall rally today. And if you're looking at all the FANGs and Google being the leader of the pack, Netflix is the laggard, down 1.5% today. Now you were bearish on this name, even coming out of that earnings call. So here we are.
Yeah, I was short into the call, still short. Yeah, I mean, I'm probably going to roll down put spreads now. I mean, so here's the best thing I can say about Netflix. If you're bearish, it's right at a cloud formation, which is actually very dangerous for the bulls, because it could be a support point here. Now, other people might key off more of that post earnings low of like 345, 343, whatever it was. I key more off my technicals. I've done a lot of work on these, programmed a lot of these. So, it's breaking various trend line support. It's, cloud formation's dangerous. It's breached a bunch of moving averages now. So actually, and stocks actually can drop a lot more from a lower price. So, I always joke, the first 20% down on a short, that's the heavy lifting. Just like the first 20, 30% recovery move on a stock, that's the heavy lift. It can be very, very beneficial, but it's heavy lifting. And then, once things turn and the momentum turns, then you can get a bigger move. I mean, kind of the last line in the sand to me is around 340. It's basically the prior high before the recent highs. So, at one point, 340 was the all-time high in Netflix, and it was up roughly 140 points on the year. I think there's a high likelihood that all those 140 points from 340, so let's just say entered the year at 200 roughly, went up to 340. I would almost say Fibonacci retracement from 50% is 70 points. So what's 70 minus 340? 270. Yeah, that's probably my short-term target. Short, intermediate term target is 270 on Netflix. So some things have to happen likely. I mean, if the market just keeps roaring at higher, at some point the buyers will probably be able to bulldoze the bears in Netflix, even though that report was pretty bad. But if the rotation occurs, if the market here's what I think we're setting up, by the way. I think we're setting up a few more good days. Maybe, we lift into a few more days / couple weeks of really good reports. Eventually what will happen is the market will just get overcooked short term. and then everything will then we'll be in the phase where instead of good reports getting bought or supported, good reports will get sold. So that's probably what we're heading into. We're probably heading into, good reports still can lift the stocks until the day they don't. And then we probably have a 2-3 week phase where all good reports get sold, no matter how, unless the beat's just crazily spectacular. But yeah, I mean, I think the line in the sand on Netflix would be, in fact, I'll probably have another short stop at around 340, 345. If it closes below 340, 345, I'll probably either add or increase or re-up on shorts on it. So and again, I don't mind staying short, even if this thing, if this thing were to go up at 10, 20% again. I'm not worried because I figure my longs will probably more than make up for whatever I lose in the short anyway. So I kind of like this both ways. I like it just as a short, for a trading short to make money. And again, I finally did one. I hadn't made much money on Netflix shorting it this year. So I finally hit one pretty good. But I also like it as a hedge. So I kind of think you can win like two ways on this one.
Yeah, I just found it very compelling that this one is not participating with Google at all, and here we are flirting with that 100 EMA, and I'm assuming that is probably one of the technical components that you're looking at.
Like.
Yeah, that is that you're looking at. Should we get a breach below that, which is around 343?
I mean, here's the thing too. You get 343, 340. There's a bunch of stuff that lines up there, but then there's just not much that saves it. I think the 200's around 275. Might be a little higher than that.
Yeah, I got 280.
I mean, this is the kind of. I mean, here's the thing. I don't want to beat the horse here too much, but honestly, on that report, I mean, I kind of thought it was going to be down 80. So it was down, and they bought it, but the lift has been faded very aggressively. But I mean that move down to 340, 350, I kind of thought was right. Now I even said, I mean, I figured they'd buy it. I figured they'd buy it, but they probably bought it more aggressively than I thought. But honestly, I mean, when I saw those numbers, I'm like, this thing could be down 100. So. I think it's just the pervasive bullishness is the thing that has kind of supported this and prevented this from dropping more.
All right. Well, let's talk about another bellwether here, Microsoft. We haven't had a chance to talk about them since they reported. What's your takeaway on this one?
I'm very close to putting an investment short on this one. I'm actually, full disclosure, I'm short. I literally could cover the short, today. If I'm gonna see how this. We talked about this. So it gapped up on the report. It was a pretty small gap. I mean, there was a lot of excitement over a $3 move. I mean, I probably haven't seen that much excitement over a $3 move. So less than a 3% move too. But I haven't seen this much excitement on a move less than 3% on the stock in a long time. I don't know. Just it kind of feels like it's out of juice to me. So the only reason why I'm not long-term short on this one yet is I just don't know how much I'm going to get paid on it. Like, if I get 5, 8, 10 points, I'd probably be thrilled. But I mean, this is not one I would say has the risk of a horrendous Fibonacci like 50% or 62% Fibonacci retracement or something. So, this is relatively well supported on valuation. I do think people are a little too enthused about the durability of earnings. So we'll have to see. But I think earnings. I think we're getting pretty close to where they're probably squeezing as much as they can out of the stone. But yeah, I think a fast move down to kind of like 95 to 100 wouldn't surprise me, and that's probably where I'd cover. But I don't know. I might post this as an investment short. The problem is that I think I'd just rather increase IGV because there's some Microsoft and IGV anyway. Mm-hmm. I don't know. Like I say, I just don't think there's that much downside. But I do think that I could catch 5 to 10% downside in this relatively easily.
All right.
I mean, good report, but again, wasn't it? I mean, I could say that report was priced in the stock at $90. So.
All right. Now, I want to ask you about a name that is gotten beat up a lot. You don't talk about it. I don't recall you've ever talking about it, but it falls in that low price stock. I mentioned it to the listeners earlier. It was up a little bit more than it is now, and that's GoGo, GOGO. And the reason
I don't
why
think I know it.
oh
I don't. Not to cut you off, but I don't think I know it. So if I have no idea, I just don't. I don't think there's anything I can really comment on.
That's fine.
Is this the stock that was the airline?
Yeah,
Yeah, no. All I'll say about this one is that when this came out, I didn't really like it. I was just like, I don't like the TAM, small TAM. Other entrants could come into it. So I'm put it this way. I don't know much about it, but I'm not surprised that it's kind of failed.
Yeah.
Because these are the kind of deals that typically fail.
The reason I found it compelling, and it falls in that wheelhouse of a tier 1 downgrade that is trading off its low. So Raymond James came out and downgraded this one today, and it was trading almost 1% higher. Now it's back to unchanged. And that's why I always say wait till the end of the day to see what happens on these things, because it's that particular trade, it's a trade in my wheelhouse, but the particular trade sets up only when it's at the close of the day. So you want to see that action, that follow through at the end of the day, so you don't even initiate it during the day. You just watch and see how it plays out. And now look, this is a perfect example of why I stress wait for the opportunity, because now it's down and it could go down and then the trade's irrelevant. So what I tend to do is throw trades, potential ideas on the radar, and then let it play out as it may, as opposed to just, hey, just go ahead and do it and speculate that this is going to do what I think it's going to do, because right now it's not. So anyway.
Well, here's what I'll say. I mean, I can help me. I have made money on names like this in the past. If I think there was a gaming company got bought out. I think it was called King Digital. So I didn't really like the name at all, the IPO.
They were the Candy
Am I
Crush.
right on that?
The Candy Crush.
Yeah, I think so. It was, anyway, so this gaming company comes out, hot IPO, blah, blah. I'm like, don't really like it. But you know what it did? It went down and basically traded pretty close to net cash. It's, they had revenues. I mean, they had a decent revenue base. I just didn't see really any growth. It's almost like whoever timed the IPO timed it perfectly to milk it. Right? And so, but they got bought out. And the reason they got bought out is because, hey, they had revenues. They have potential future profitability. They can make more games. But I think they got down to where they're around that cash. So what I would do on GoGo is I'd just look at the balance sheet. And I'd say, okay, are they burning cash? Maybe the cash burn's low. Maybe they have a decent cash stockpile. I would venture to say they might, because they probably raised a lot of money at IPO. So there you go. I mean, so, if you can catch these things trading around net cash, if they're trading way under like a really cheap multiple of revenues, and there's some hope of either they're still growing or there's something that will increase profitability, they can end up working, right? They can end up working great especially from a percentage. I just don't know this name, so I tend not to say stuff. But if I were to look at it, first thing I'd do, I'd look at balance sheet. I'd say, hey, what's net cash? What's cash burn? Then I'd look at revenues. I look at revenue growth and blah blah blah, and I'd kind of evaluate it from there. But I will say this: you might be onto something, because it's entirely possible. I really now, in retrospect, man, why wasn't I short this thing? But if I look at this, Snap could end up looking a lot like this in a few years. By the way, in 4 years from now, Snap could be a $5 stock. But anyway, you look at this, you're like, well, it's a way better buy now than it was at 10, or than it was at 15, or what. I'm serious. Sometimes you just kind of have to. You can make things complex and do a lot of research, but at the same time, you're like, hey, if you kind of let's just say you kind of liked this one a couple years ago at 10, but didn't do it. Yeah, you might want to circle back to it. Maybe there's something there. Now the other thing you got to look at too is if they do have some fundamental viability, like long-term financial viability, sometimes these things get picked up. Meaning, you get somebody finally says, hey, let's just buy them. Like Google could buy it because Google wouldn't have to make money on this name, right? They could just say, hey, this adds to our portfolio of services that we offer to people that use Google, right? Or hey, Amazon or Facebook or Apple or whoever.
They wouldn't even have to change the name very much.
No.
Go,
I mean,
Google.
and by the way, it was funny. I figured you'd say something about Go and Google, but really, if you think about it, sometimes a really good deal for a very large technology company is to add a really nice service and not really worry if that little corner of the company is making money. It's just like, again, let's say you're Apple. I mean, everybody that flies still likes to be able to use their Apple devices. If you basically, by buying this company, you make this more available and make the service better for people to use their Apple devices while they travel, it just makes people like Apple that much more, right? I don't know. Maybe I'll take a look at it. I mean, like I say, I probably do the same thing I just said. I'll look at the balance sheet. I'll look at their net cash. I'll look at their revenue, see what happens. But like I say, it's a lot better buy as long as it's financially viable, as long as there's no risk of bankruptcy, which I have zero idea on. If it's financially viable, it's like say it's a way better buy now than it was at the IPO price. So.
Yeah, for sure. Well, it reminded me a lot of the GoPro trade that we talked about several weeks ago, and it had the same type of the same type of thing, the same thing that brought it to my attention, and we talked a little bit about it, and that's working out well so far. I mean, that was down when it was trading $5 GoPro. So anyway, I thought I'd bring it to your attention.
By the way, I just did a quick look at the balance sheet. Do they have $1 billion in debt? It looks like this one might be a net debt situation. They do have a lot of cash. It looks like they have about $400 million in cash. So there's no issue with short-term cash crunch at all. But this does not look like a net cash company, which again does not mean they won't be around. But like I would like this better if it was a net. So let's say they have the $400 million in cash and no debt. Then I'd be like, I might have to circle the wagons on this thing. The fact they got $1 billion in debt and roughly $400 million in cash means their net debt. Obviously, anything that's net debt can go down, right?
Sure.
So at some point they have to start converting, revenues into profitability, or that debt will sink them. So.
All right, well, fair enough, and that's why we ask you these questions. You get an idea, and sometimes you get a voice of reason, and hey, I think that's what a lot of...
you said, watch it trade, watch it trade, and I mean, $400 million cash, it's probably going to take them a heck of a long time to burn through that cash, so...
Yeah, we shall see. All right, let's move on. What are some of the big earnings events that you're really going to be paying attention to this week?
Yeah, and remind me about some kind of cheapies that I'm kind of looking at right now too. Well, tonight I don't have any position in this, but there's a stock called Infi, IPHI. I always look at their report, especially
Infosys.
No, Infi. It's Infi Corp.
Oh, I'm sorry.
IPHI.
IPHI. Yeah. Sorry.
Yeah, they're a bandwidth provider, silicon provider into this. High capacity space. I mean, they're sort of a tertiary fiber optics play, even though they're not really a fiber optics name. But they have 40G, 100G, and beyond type solutions. So I do watch them as kind of a potential tell. There was some interesting news too. Light has been trading poorly. I think you saw I took a trading position in that. Not really working. I'm about flat, maybe down a little bit on it. But interestingly, it bounced huge yesterday on a company that does 3D sensing had a really good report. So I mean, this is one of those funny things. Sometimes you get a really good buy in a space, and not just a name, but in a space right before some pretty big things happen. And again, I mean, we don't know how many phones Apple's going to have in the 3D sensing lineup. They only had the iPhone 10. There are more Android phones now coming onto market that have 3D sensing capability. 3D sensing capability is proliferating in other areas. But, what if Apple has 2 or 3 or 4 devices with 3D sensing? I mean, there's some things that are pretty interesting to me in a space where the stocks are not acting very good short term. So that that's Finisar IIVI, which is 26, Lite LITE. There's a couple other players. Himex is in that space as well, HIMX, but I haven't really done anything on that stock. So and Infi is sort of in that space. They don't do 3D sensing, but they're on the other side of things. So I don't know. It's really interesting. And like I say, sometimes you get pretty good selling right before you get good news. I have seen that a lot. I mean, other people would say the opposite, but statistically, so in other words, oh, hey, the chart looks bad, therefore it's going to keep going down. Well, sometimes the chart gives you a head fake before you get a pretty notable reversal. So that's a report to not interested in. MKSI, some of these chips still look very extended to me. MKSI reports. With Corning I'll look at too. I mean, I by the way, for people that like safe big tech, I like Corning. It doesn't really have the sexy, but I wrote up a deal on Intel when it was a lot cheaper. I want to say when it was like 30, 31, 33, something like that. That I'm like, hey, I'm not going to do any Intel here, but for people that like big safe tech, Intel's a good buy. I think Corning's a good buy right now. Again, doesn't really have the sexy for what I like to do, but Juniper's another one. If you kind of like boring tech, with that theoretically could have a lot of upside, Juniper's another name. But anyway, Corning reports tomorrow morning. Trivago's tomorrow morning. I mean, at some point, I really do think we'll get an inflection kind of turn in Trivago's results. And it could happen sooner than later, just because I think that growing GDP. A lot of times the travel cycle tends to be a late cycle economic area. So, a lot of times, I'm trying to remember this, but I think I'm right that I think 06, 07, the travel stocks were really, really strong. Again, really late cycle strength, but they were. So Trivago is interesting to me. And then tomorrow we start hitting it hard. So, I'll just wrap AMD, Citrix, Facebook, F5, Gilead, PayPal, Qualcomm, ServiceNow, Xilinx. That's all tomorrow night. And then Thursday night we have a bunch more. Friday morning's Twitter. So, there's a bunch of stuff coming. I think, Amazon's Thursday night. So, they're all sort of important reports for various reasons. Some on the short side, some on the long side. So I'm just kind of take them as they come.
Well, it sounds like we are penciling you in for either a Thursday or Friday call, depending on how many.
Friday's probably better, just because we'll have the Twitter result, and that's something I would be interested in talking about. Plus, we also have Imperva the night before. Imperva is still a very weirdly valued security stock, by the way. Just that's about the best way I can describe. It's very strange that the company's done, and they've had a lot of just bone-crushingly good beats over the last year or two. Stock just hasn't done much, and we see that by the way, CyberArk didn't do much either. CyberArk's having a ripper every year, so CyberArk's finally paying me pretty good. It took a little while, but I always had a lot of faith in that name. That it was just trading stupidly. It was stupidly cheap with a lot of upside, and I don't think it's done. I think CyberArk's put in roughly half the move. Maybe not even quite, but let's just say I think roughly half the move that they'll probably end up putting in. That's CYBR.
All right, let's see. I did want to address a listener question. Let's see. And it says, if you were still in CRTO, would you hold it through earnings?
I probably would, because I think they kind of had their big ugly quarter, which I think was a result of like Google changing some algorithm stuff, and that was a while ago. By the way, I bought that. I really like that huge drop in Criteo. It's not really up much from where I sold it, so I kind of feel okay. I hope this thing doesn't go rocket ship to like 55 without me. I could get long this name again. This is a great question, because okay, if I were to line this up, would I rather be long Google from current prices or Criteo? Now, there's more risk, but I don't think there's any viability risk. There's just, these guys can get rocked on bad news, but they can also come back. This is a nice business. There's also some the Europeans are putting pressure on Google. Maybe they'll kind of find a way that this helps. Criteo, I believe, is based in France. I know it's a European tech company. So, but little things like that can kind of happen. But this thing has literally worked from the trendline break that I pointed out, and I bought that trendline break. The trendline break occurred at 25-ish, 25, 26-ish. So this thing's literally worked from the trend line break, and now longer term moving averages are now support instead of resistance. So I could buy this again. I kind of hope there's something happens to give me an entry on this, meaning I get some kind of deal where I can buy a rate on the name.
All right, now I'm just looking.
As you know, you don't have to own all these. You just keep them. You don't have to own enough of the good ones. But I do like this name, and again, I'd rather be long this name than Google from current prices. I think this has quite a bit more upside, all things being equal.
Okay, and I just looked up when they have their earnings, and it looks like August 1st before the market.
Yeah, so there's some time. I mean, there's a chance I might even buy some of this ahead of the print. A lot for me depends on how other positions work. Do I need to trim something, or do I want to trim something? So it's all this big relative matrix game I'm constantly balancing. But if I get some exits on something else and it frees some things up, and again, I still want to maintain a pretty high cash position right now. Maybe something changes there. I mean, really what I'd like, are we ever going to get a correction again? So I know we will. I just don't know when. But, just a good run-of-the-mill, 3.5% to 6% correction in the market might give me a really good entry on Criteo. I mean, that might be all it would need.
Well, don't look now, but NASDAQ futures have gone negative, so...
Yeah, I mean, we're right at that point. I mean, it wouldn't take much to cause some market selling. Although, I mean, I'll say this. I mean, as bearish as I am on some of these highly, highly valued names, if earnings reports keep just crushing, there's probably not a ton of downside in the market. There is some downside, but it could be like this year. I think we've said this multiple times this year. We could be in a trading range for most of this year. And so then, as expensive as the market was, if we have 4 quarters of exceedingly good growth and we don't get, in the recessionistas get proven wrong again, and next year lines up okay with another year of economic growth, well, guess what? The market will be a lot cheaper than it was at the start of the year after 4 quarters of good results. So, but we'll just have to see what happens. But it just again, there's a lot of extended things all over the place, put it that way.
So if we don't talk till Thursday or Friday, that means we won't get to preview Qualcomm. We will get a recap from you, I'm sure. But what's your takeaway? I know there's
long and strong, man.
No,
I mean, not to cut you off, but like some things I just don't need to do much on, or even really say much on. I mean, here's the best thing about Qualcomm. It's had a pretty firm technical turn now off of 2 significant lows, which it held like the Rock of Gibraltar, right? So the technicals now look pretty good, and you really have had yet to have any good news. So I think after this week we will know what happened with NXPI, because I think Qualcomm put a line in the sand that if China doesn't approve the merger, that they're going to walk away from it.
I think it's tomorrow, and that's part of the reason why I brought them up.
Yeah. So it could be tomorrow. I thought it was the 27th, by the way, but it doesn't matter. At the end of this week, we'll have a resolution. But again, everything that is good for Qualcomm is still quite a ways in front of it. It's not, now the beauty is it's not 2 years in front of it anymore. So now it's more like it's getting close. In fact, Verizon was talking about 5G deployments on their call today. It's not going to be huge yet, but I think they have 3 or 4 major metropolitan areas lined up for 5G deployment. And I thought they said they were going to start relatively soon. So, and that's the biggest catalyst for Qualcomm is 5G. There's a bunch of others. I mean, Internet of Things. I mean, there's again, the proliferation of bandwidth is huge for them. Another iPhone cycle is big for them. I think you saw that there was some news that Intel didn't win a chip design or something like that. I think that's relatively firm news. I don't know if it's been confirmed, but I think it's relatively firm news. Apple Insider had that. A few other people had stuff on that. So, like I said, nothing's been resolved with the lawsuit. We're not into the 5G cycle yet. So there's all this good stuff in front of Qualcomm, and the stock's acted pretty good. But we'll just see no matter what, I think Qualcomm probably goes higher over a duration of, let's say, weeks. If NXPI doesn't go through, they might sell Qualcomm off short term. I hope they do. I want to buy more again at 55 and below. So, because this is one name I would still be happily build and increase my position on. So I'd rather buy it at 55 than 62. But I would have no problem buying some at 62 either, because I think there's a lot of upside. So we'll just have to kind of see what happens. But I don't know if I think earnings really start to matter for this name probably in Q3 and Q4, because you might get more clues on some 5G kind of momentum starting. We're still far enough away. I don't know if we're going to really hear much about 5. I mean, they'll probably comment on it, but I don't know if we'll hear much on it. So we'll just see. I mean, the immediate catalyst could be NXPI, and honestly, I have no idea. I mean, I think it's kind of a coin toss whether that deal goes now or not. By the way, I'm going to be purely selfish. I hope it doesn't. I hope, because I'd like to get long NXPI on a big raid. So, but the only problem is I think there's a lot of people kind of with me on that idea. So we'll see what happens. But I could own both those names. So I kind of hope the deal doesn't go through at this point. So because if it goes through, I think that helps Qualcomm. But I'd rather be able to own both names, honestly. And I do think if it doesn't go through, man, I don't know how long it's going to take for somebody to want to buy NXPI. So that could happen relatively quickly. So this is a pretty exciting week, I think, for Qualcomm, just to see how it trades and how it acts. And I'm kind of hoping maybe there's some volatility to add some more.
All right. Well, I think that's a good place to leave the listeners with a cliffhanger, because we will have you back later on this week to go through all these tech names. We got some heavy hitters still on deck, and Apple's next week, right?
It is. I believe it's early next week. So we'll just have to see what happens. Like I say, it's wouldn't cause much to have a sell-off. At the same time, a lot of good reports coming. I mean, I think everybody kind of knows what we're going to get this quarter. The only thing I think we don't know is kind of the magnitude of the beats or miss. I mean, here's the biggest surprise: Netflix. And again, it's amazing, but it really has held up. Given how bad that report was, Netflix really has held up well.
Well, not today.
No.
It's actually, I think this has been
down with the Nasdaq move, right?
Well, I think it led the Nasdaq. I think this one has really been. We had Google leading the way today, but for the most part, I think this one has been the dog wagging the tail. As this goes, so goes the Nasdaq, really. And if you use this as a leading indicator,
well, by the way, look at Microsoft as negative. You got, like I say, there's plenty of things that could kind of roll over. I mean, I don't know why Twitter's down $1.50, but Twitter now seems to be. I know we're probably running over. Twitter though used to be kind of. It didn't trade with the market. It just did its own thing. Mm-hmm. Now Twitter seems to be almost like hyper Nasdaq. Even though, again, it's funny because it really has never traded that way. But now it seems like you get a Nasdaq sell-off, they raid Twitter hard. And then you get a big Nasdaq turn. Twitter can make a big turn. So I don't know. It's kind of funny that Twitter is sort of, it's almost like it's kind of started trading with the fangs a little bit. Mm-hmm. And maybe that's just the way it's going to be until they report. That could be it.
And I think it might be. I think a lot of that might have to do with just some profit taking and
option positioning,
squaring up ahead of that report. It has had a big run.
That's right.
If people were getting in on this one down in the 20s or 15, like you were talking about, it makes total sense of people taking some off the table. It's a nice run. Take some risk management. Nothing wrong with that either. No.
I mean, hey, I think I've posted this. I mean, I've lightened up Twitter. Just it's too big of a run not to lighten up. So,
sure.
There might be a point where I could maybe just try a little ahead of earning. I mean, 38 to 41. I think that's a decent little area. But you get this close to earnings report. I don't usually change much because. I'd rather just get a reaction to the report and see. Let's close on this, by the way. Have you ever noticed, and I'm sure you have, sometimes you get a big move on a stock after it's made a big move, right? So, in other words, put it this way, the setup, if I still don't think Twitter has a really high bar. And what lowered the bar was all that news on them deleting accounts. Well, so here's the funny thing: if you've been doing research on Twitter, you know they've been deleting roughly 10 million accounts for many months now. So the whole story about them deleting accounts is actually a positive, not negative. And by the way, if they would have been deleting a bunch of accounts when the stock was 12 or 13 or 14, the stock probably would have went up on that news. But now it's going down on that news. What I'll tell people is, it's not so much of what the MAUs are probably going to be quote unquote gap adjusted, meaning they're going to be adjusted for the deletion of accounts. But here's the thing: what happens to Twitter's user numbers when they're done deleting 10 million accounts a month? I'll just leave it at that. Because they have been deleting tons of accounts a month. I bet they've been doing it for about a year or more. At some point, they will have 90, 95, 98% of quote-unquote these bots, bad accounts, bad actor accounts deleted. Okay, what happens at that point when they're done deleting accounts and they keep adding users? So, right now we've been seeing, for the last year, we've been seeing a net MAU growth with a lot of account deletions. So, I'm just going to leave it at that. Maybe Twitter organically has a lot more MAU growth than people see, but we just haven't seen it because they've been deleting so many accounts.
Yeah, that'll be interesting, and we will find out Friday morning, right?
Well, I don't know if this would be the quarter we find out. Wait, I think
come on, man, hyping it up.
We'll get some clues, right? Because I'm sure somebody will ask them that question about all these account deletions and stuff. So, we'll see what happens. I'm just saying that here's when we'll find out. When you get a quarter where, like, what did MAUs grow at? Was it 6 million, 7 million? I don't know, some kind of smallish number. You get a quarter where MAU growth isn't 6 million, but it's 26 million or 36 million. That's when you'll know.
Well, every time I try to let the balloon fly, you just step on it and pop it. So with that said, I'm going to cut you off for a bit, and
good enough.
We are going to talk on. You know what? Friday seems like a great day. It'll probably be winding down. People will be earnings fatigue. We'll have a lot to talk about. A lot of names we'll have already reported, and of course we'll be able to preview Apple as well. So, hey, as always, it's been a great discussion. Thank you so much. I'm sure a lot of the listeners are happy because we had some questions for you directly on some of your names. So, as always, thanks a lot.
Yeah, appreciate everybody.
Oh, you know what? Maybe I got one more that just came in. SWIR, because I know that one's been.
Oh yeah, no, that's
a hot one.
See, to me that one's a pretty easy one too, as far as the timing of it. In other words, I have some. It's not a big, but in fact, a small position. When Qualcomm really starts humming, I'll probably increase this one, because that will likely mean that people are now getting in front of the 2x4 coming on 5G, right? And so again, the dumb money will wait till the 2x4 is hitting them across the head and pay up hugely for 5G plays, and that could be a year, 18 months, 2 years from now. But I think when Qualcomm starts moving on 5G and starts making positive comments, let's say they start having some beats because of 5G, that'll probably be the time. Well, you probably maybe want to be a quarter in front of it, but suffice to say that we will probably see SWIR. I mean, right now, SWI, I always call it SWIR. It's CR Wireless is the name, but there's just no interest. There's no as we know, if the algos can't move stuff, they just don't trade it, right? And so the stuff they don't trade basically has almost a perpetual downward bias, because the bulk of the trading is selling, not buying. Because they can't make any money buying it, because there's no spread for them to juice on the upside. Mm-hmm. So, the only juice there is kind of the occasional raid against it. So, but I like names like this, because this is where you get these. I mean, by the way, what if GoGo is one of those? I don't know. What if GoGo has just gotten artificially cheap because it's lost institutional interest, and so the only trading on it has basically been net distribution. That's where you get these crazy, artificially cheap stocks. I'm not saying GoGo is one of them. I don't know. But I do think Sierra Wireless is one of them.
All right. Now, we will leave it at that. All right, Sean?
Good ending.
All right. Thanks a lot, Tech Trader.